Also, I've been asked again to reiterate, if you could please wear your scarves and make the ambassador and the minister feel as welcome as possible. And with that, it is my great pleasure to welcome the ambassador, His Excellency Mthuli to the stage.
Thank you, Director of Ceremonies. This has changed over the years. It used to be Master of Ceremonies, Director. Some say they're just here to guide the ceremony. But thank you very much, and Honorable Minister, our guests, and our host, Mr. Schwarzenberg, thank you very much for graciously hosting this function. My role is to introduce the Honorable Minister. But, you know, as diplomats, we always take the moment to steal a little bit of the time to do a commercial. So it will be a very quick commercial to say, I'm the ambassador, as I've said earlier, of Zimbabwe to the United Nations in Geneva, but we are now taking a second responsibility of taking care of your concerns as business people, as prospective investors. So please feel free to come to the mission, or to write to us, to email us, to circulate our contacts later for any concerns. We normally used to focus on the United Nations, but we are now being given the bilateral role as well. So that is quite good and quite exciting. So what was proposed earlier, the Swiss Zimbabwe Business Circle, we will be working on that together with our counterpart, or my counterpart in Zimbabwe. So with that, let me now go to my formal responsibility, which is really to introduce the Honorable Minister. I'm not going to go into detail. Most of you know the Honorable Minister. He has been in this position since the 7th of September 2018. And of course, you all know he's a noted academic. He's been a professor of economics at various, in the United States, they call them the Ivy League universities, but in the UK, I don't know what they call them, but the Oxbridge or something, yeah, universities, and you know, like the London School of Economics, Oxford, and so forth. He has been there. He has been the vice president, of course, of the African Development Bank. He has had his own bank in Zimbabwe. He's in business. So many things. He has been a dean at, I think, the is it Witwatersrand University? So many institutions. I could go on, but the stage is not for me. The stage is for the Honorable Minister. So with that, Honorable Minister, please go ahead with your presentation. So the 20 minutes presentation was not for me, it's for the Honorable Minister.
Thank you. I'm using something. You gave me something else to allow me to move around. Ambassador Mshavani, thank you very much. Let me thank Uz Schwarzenberg for again hosting us here at the Dolder Ground. We're just remarking that the next time we host something like this, it will be the Dolder Ground in Victoria Falls. Yeah. In we're very honored. I'm just smiling at him, absolutely. Colleagues, I should say that welcome to the Dolder Ground, welcome to Zimbabwe, and welcome to this Zimbabwe Investor Forum in Switzerland. It's the second year that we're doing this. We started last year. It's our second year. We want to keep this as a tradition. And I suspect that you've really become the de facto Swiss Zimbabwe Business Council by default. Yes. So by your presence here, I thank you for that. I just want to share with you some highlights of investing in Zimbabwe, what you are being confronted with, what you'll be confronted with if you're not yet involved. I had a session earlier with half of you, so this is a repeat. So just bear with me as we go through this, and now we form out our presentation because it's a more public forum. I have here with me a group of Zimbabwe business people who are here, and they will come up to the stage when we do the Q&A, but they will also make a presentation after mine just to bring that more micro business flavor to the more macro presentation that I will give. And also we have one legislator here, Themba Mliswa, just to show that our parliamentarians are very active in business as well, he also chairs the Parliamentary Committee on Mining and Energy for the Parliament of Zimbabwe. They give me the hardest time whenever I appear before them, so they're doing their job, I can confirm that. And next slide, please. I guess, it's me who's going to control it, by the way. I think I have to control it. Oh, I have the power. I thought someone was running it. So just some opportunities. If you can't read this, I'll just speak through it. Because some of the lectures are quite small. Zimbabwe is endowed with incredible mineral resources. But I guess the first and foremost resource is people. We have probably one of the best education systems in Africa. Even I'm amazed, 2 years ago, no, maybe smaller than maybe 4 years ago, when I was still a professor at Oxford, I decided with my wife to sponsor a school in the south of the country, in the area called Mthuli, a primary school. We're going to twin the school where my son was attending in Oxford, with this school, kids to mentor each other, teachers to mentor each other. I tell you, when I got to understand what they were doing in that rural school in Mthuli, Zimbabwe, I said, we're not going to do this, because they were just as good as the Oxford school. And I mean this is a rural school. It's amazing. It's incredible education. So really, what confronts you in Zimbabwe as an investor is a population that is either skill ready, task ready, or ready to be taught, and they'll learn very quickly. So human resource is one of the biggest and best endowments of Zimbabwe. Secondly, is the natural resource in the form of minerals underground, but also natural resources overground. Underground, we have easily 50 different key minerals that are available globally, from lithium, platinum, gold, coal, I mean, the whole diamonds. I didn't even know we had diamonds until a few years ago. We have diamonds, 3 possible sites. It's just amazing. And really, as a government, we're determined to make sure that as you invest, you invest through the entire value chain, from extraction all the way to beneficiation, but also try to build the cluster industries around mining, because at the end of the day, some mining ventures don't really create a lot of jobs. You create more jobs out of the cluster industries that support the mining sector. And when I was younger and foolish, I tried to get into gold mining, and I discovered that is the wrong thing to do. The right thing to do is to make the boots, the helmets, the dynamite, the clothing. That's how you make money easier in mining. But for you have more capital than me. You need to drill down and make even more money, I tell you. So we've got those natural resources. Those above ground is about the tourism sector. Really is the big five. We have a well-managed tourism sector in terms of environmental management, wildlife conservation, working with the community so that they benefit from these natural endowments. The hotel sector around the mining sector. The Victoria Falls is already full at the moment. You couldn't get a room during Christmas in Victoria Falls. Herbert Nkala here, who is in the tourism sector, was now having his guests go sit in Botswana and Zambia, and then drive in every morning to come and view the Victoria Falls. So that's not great for the visitors, but it just shows you there's so much business, and you can invest more in the hotel space. There's also great investment opportunities in the infrastructure space. We already have very decent infrastructure, in fact, very good infrastructure. I've been all over Africa. When I was vice president of the African Development Bank and chief economist, I went everywhere. And Zimbabwe infrastructure, we keep complaining as the government, as business, infrastructure is bad, but it's some of the best in Africa. Our roads traverse north, south, east, west, whichever direction. We have a road system that is decent, but the opportunities are there for upgrading, for introducing a few other roads. But the upgrade opportunities, the one widening those roads, is the way to go. So we've got all these opportunities, and then it's up to you to really engage, and see where you can do business. Then coming to the issues of property rights, rule of law, and so forth. We're a very constitutional country. We adhere to property rights and rule of law. There is no danger of misappropriation. And I want to be clear, on agriculture, we will compensate the farmers. Read my lips. In the next few months, we're going to agree on a figure and agree a payment plan for the improvements of all the farmers. In the budget for 2019, I already allocated $53 million, which we're going to start paying as of next week to the older and vulnerable farmers who were dispossessed. I've asked them to give me a list, which they will. I think it's already delivered in the office. So when I land next week, we start paying. We're very constitutional. We agree to this. We're going to do it. There's no risk of us deviating from the rule of law. We're aligning all our laws with the Constitution. It's 163 different laws, 206 statutes. We're doing all of that. You'll agree with me that we had a peaceful election last year until that unfortunate incident on the 1st of August. Very unfortunate indeed. People lost their lives. The president walked the talk, put in a commission of inquiry. They did what they had to do, publish a report. The report is public, it's out there. And then we'll make sure he's making sure that he follows up on those recommendations after this Christmas break. You see him do that. The whole environment for peace and reconciliation is being engendered in Zimbabwe, and that's a good thing. You want to make sure that you're putting your money in a country that is striving towards building social cohesion, and we strive to do that all the time. Some of you who keep a close relationship with those who observe our elections, we're doing everything we can to make sure that we keep improving and opening up our democratic space. After all, we can't be an upper middle income country as we aspire by year 2030 through our vision 2030 if we don't get the institutional environment to support that kind of status and also accord us that kind of status. We are doing that indeed. Then if I can just switch to the macroeconomic front, I'm just going so fast. I also know the slides. Whatever I'm saying is in the slides. You can have time to read them. Is that we want to make sure that we stabilize the macroeconomic environment. So we've launched the Transitional Stabilization Program to do exactly that. But you know what? In trying to introduce stability, sometimes you have instability first, because we already had disequilibrium developing over the last 20 years. Those who are from Zimbabwe, I needn't say more. When we've got a double-digit budget deficit, which is what we have, to bring it down to single-digit, you have to cut here, cut there, cut that, and then you just become a very unpopular finance minister. People tax to the streets, which is what they do half the time, and that's not unusual. Reforms are hard, but the test for us as government is to walk the talk, stay the course, and make sure that we're clear as to where we are going. And some of you may feel that sometimes we're a bit opaque in trying to communicate where we are going policy-wise. It's also the art of policy making. If you are going to change something as sensitive as currency or whatever, you cannot communicate everything up front. It's a bad idea. Everyone takes positions and they do all manner of things, so sometimes you sound opaque, but we have a clear plan, we have a clear direction. So first order of business is for us to control the fiscal deficit. We're doing that, move to single digit. Even in my budget, we gave it a theme of from austerity to prosperity to signal that commitment. And by the way, the word austerity is not really here. I think this is the first time I'm saying this. I didn't say this about, which is that the word austerity for me was targeted at government itself, not the public. Of course, you hear the public say, "Oh, an austerity minister, oh, there's too much austerity." But that was not my intention. My intention was ourselves to be austere in the way we go about managing our finances, so that we can then engender prosperity for the citizens. That was the intention. But of course, messages are what they are. So rationalizing the wage bill, cutting our salaries by 5%. We're doing all those things to really manage, get a good picture on the fiscal front. Expanding the tax base, the 2% tax that has become very famous is all designed to make sure that there's better compliance on revenue collection, but also just expand the tax base to make sure that the informal sector can also start paying taxes for a change. You've noticed that we've not issued any treasury bills since September. So the domestic debt is under control. We close the tap Those of you Zimbabweans, and none of them, they are not here, who live on the parallel market, you notice that it's been stable for a while. The reason is because we closed the government tap. So something is working. We've created stability. Enough about that. So moving on to the currency front, obviously we don't have monetary policy, we have fiscal policy. So it starts with fiscal policy. So having done that, we're now edging into monetary policy. We're building the institutions that will enable us to do that properly, slowly but surely, and we will introduce a domestic currency. The idea of Zimbabwe using a US dollar forever is a bad idea. Investors, you love that. You love that. So you want a US dollar currency predictability, blah, 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 blah. But it's bad for competitiveness. We cannot build a competitive economy using a hard currency, using a developed country, but for both transactions and reserves. So it actually costs us $1.5 billion a year to use the US dollar as a transaction currency domestically as well as a reserve currency. It's just too expensive. So we need a way out of that. A domestic currency is the way to go. The current system is far too expensive. So we're busy working with some of you who are in this room to raise the required levels of reserves, of credit lines, so that we can build the right infrastructure to then launch a stable domestic currency going forward. Now, looking at the other opportunities is really on the public institutions reform or parastatals reform. We've got about 43 state-owned enterprises, and we want to engender this notion of a private sector-led economy. We're not trying to raise a lot of money from privatization, frankly. We will never raise a lot of money, but it's about making sure they're efficient, they bring in the right partners for technology, they improve their governance, in terms of management, they just become more efficient enterprises. That is our aim. 11 of them are ready for privatization or restructuring, and they cut across. It's telecoms, it's banking, more banking, and then a petrol trading company, 17 mining companies, and the list is that long, up to 11. And we're determined to move very quickly and get this sorted out. So as we do that, we also want to make sure that we're able to list these publicly on the exchange and create an opportunity for more retail investors to participate, but at least create some more liquidity for entry, exit, and for both entry and exit. I've already said a lot about the monetary sector-led reform. And there's an important issue regarding our improving the credit standing of Zimbabwe globally. This is an important issue. We owe $2.4 billion to the African Development Bank, the World Bank, and the European Investment Bank. They're what you call the preferred creditors, some of you who live in that world, and we have to pay them off, catch up with our payments on that. Because if we don't, it will be very difficult for us to raise additional credit lines for the banking sector. So at the moment, what happens is that it's really through the central bank and the guarantee from Treasury that we're able to put some of the structures in place. And further still, we have to probably structure them such that we put some gold proceeds to ensure the payment of the interest or platinum or diamond. So this thing has to be bulletproof for you to actually lend money to Zimbabwe. We need to move away from that, and paying off these institutions is critical. We're working on it, and then we'll move to the second phase, which is basically debt restructuring for the Paris Club debt, which is another $2.7 billion. We owe money to the UK, been to Switzerland, Brussels, and the EU countries, and so forth. The pleasing thing is that those creditors are really warm towards Zimbabwe. There's a lot of goodwill, and they've said to us, please walk the talk on economic reforms, and we will support you. And we're doing exactly that. And part of that walking the talk involves us working more closely with the IMF on a staff monitoring program, which will begin legally next week, but functionally it started on the 1st of December in 2018. There's just some legal things that IMF need to satisfy internally for us to have it can be formally announced. And that's a way to make sure that we walk the talk on our targets within the budget. So basically, we're just being monitored on our own targets. Now going deeper into the various aspects of the economy, again, I don't want to bore you with numbers. Zimbabwe currently is a $25 billion economy. Some of the largest sector, the fastest growing sector has been services, but of course the mining sector is incredible as a potential investment source. We have, as I said, top 50 minerals in Zimbabwe, from lithium, diamonds, coal, whatever. We are expecting investments of about 8 billion over the next 2-3 years, with revenues of about 12 billion coming through by year 2023. So take your pick. There's just a lot more. I was speaking to my colleague here from ABB. He's already realized that there's a lot of cobalt in Zimbabwe. We've even started talking about cobalt ourselves. So Zimbabwe is under prospecting. I think that's the right way. That's the right way to express it. So just more work to do. The more discoveries will come through. Now, so different sectors, ICT, part of services, with tourism already mentioned, with mining, with the manufacturing sector. I guess the one interesting area on manufacturing is that link between manufacturing and agriculture, that agro-processing space. We produce quite a bit of tobacco, but we don't have a cigarette factory for example. And cotton as well, in terms of processing of lint, there's something missing there, but of course there are a few oil expressors in terms of companies using that linseed oil to make cooking oil, but there's still a missing link. One of the missing links is to engender a closer relationship between farmers and these processors through outgrower schemes. And we would like, as a government, we would like to see more of that, because at the moment we're supporting quite a bit of agriculture directly, and we think that really the private sector is missing in the game. So we'd like to see more of you get involved in supporting primary agriculture, but for your own inputs, for cotton, for tobacco, for whatever you need for your own agro-processing. That's an opportunity that I think you could take. I'm trying to find some killer slides in terms of what's important. I've talked about mining. I've said a lot. The agriculture moved fast, and then then I'll just I've said a little bit about manufacturing. Let me just stop at infrastructure. That this is again, it's a great opportunity, and our stance at the moment is that we would like to promote public-private partnerships, PPPs, so BOT, whatever it is, 25-year, 30-year concession is what we prefer. And also, being Minister of Finance, one should always be careful in terms of balancing domestic borrowing versus external borrowing, especially when you don't earn US dollars on your infrastructure. So that balance is critical. But PPPs is what we prefer. As an example, we'll be starting a project of about $5.2 billion hydropower project between Zambia and Zimbabwe on the Zambezi River, 2,400 megawatts of power. Actually, we have a surplus once that project is completed in another 4 or 5 years' time. We've got Power China and GE being partners. They have a concession, 25 years, and they're going to do this. So that's one project. We also did the expansion of Kariba South, and then Lanka 7 and 8 on the thermal front. So there's quite a lot going on the power generation front. An area of opportunity is in the renewable energy space, solar, especially solar energy, solar farms. So that's an opportunity for you. Then I talked about roads earlier. Again, there's an opportunity on the road front, airport infrastructure. So yeah, this is a big area again, and we as government have already accepted that public-private partnerships are the way to go, and it's up to you to take your pick. We know that the water and sanitation sector is always a more difficult sector because there's a social element in it. But again, wherever we can do PPPs, we're happy to do that. Yourselves working with the city councils on water infrastructure That's also in another area. On the financial sector, we're very robust financial sector with 2,000 banks basically operating, quite a lot of microfinance institutions, but the banking sector is strong and we're making it stronger. So all the banks will have to increase their tier 1 capital to $100 million by December 2020. Now, if you look at in terms of the capital adequacy ratios, they're all compliant. They're all sitting at 20% as opposed to 12% in terms of the Basel II capital adequacy requirements. If you look at non-performing loans ratio, that has dropped quite a bit to about 7% at the moment. We also put in a bad bank to clean up the system a little bit. So we're quite comfortable that the NPLs are really under control. And also that the quality of human capital in the banking sector is very good, and there's just more room for innovation. And what we've seen, where's Natalie Jabango? I can't see where she's sitting now. She is Mr. Mobile Money in Zimbabwe, and that's really one of the biggest innovations in the sector is mobile banking. I think it's fair to say Zimbabwe is now overtaken Kenya in terms of the depth of mobile banking in the country. There's never wasted a good crisis. We had a cash crisis, so we switched to mobile money because we didn't have the physical one. Never wasted a good crisis. But I think that more innovation needs to happen in the investment space, away from banking in the financial services sector. Just more products, equity products, whether it's ETF, externally traded funds, or things like that. We just need more innovation. The other area is in the insurance sector. I think there's a gap or an opportunity rather in the reinsurance space, not insurance, but the next level, reinsurance space. So if Munich Re is sitting here, or Swiss Re, I should say Swiss Re, not Munich Re, that's an opportunity for you to take advantage of in terms of that risk sharing within the insurance space, but also products within the space. I noticed that in some of the infrastructure projects, we always leave out the insurance sector. They should be providing performance bonds. It's not just for the banks. Also, the insurance sector could be doing that. So more innovation within that sector is an opportunity for you. That was finance. Maybe I should just say finally, coming back to the institutional environment, I say that while aligning 163 laws with the Constitution, the statutes, everything, but also there are two other things. One is there are two critical pieces of legislation that we need to deal with. One is IUPA, the other is POSA. They all pertain to kind of freedom of information, opening up the democratic space. We've done a lot by way of that. Some of these protests that you see, or whatever is happening in terms of reforms, have to do with the fact that the democratic space has been opened up. You can express yourself and so forth. That is actually in progress. But there are two pieces of legislation that we'd like to amend to make sure that we make progress and really become get a legislative agenda environment that's consistent with being an upper middle income country by year 2030 in terms of our vision. And the electoral laws are being dealt with. But on the more investment-oriented laws, we're making sure that we really improve the environment for doing business. We move up in the doing business indicators. The amount of time it takes you to set up a company. Right now, you can set up a company in 6 days, but we're determined to reduce that to 1 hour. I've just come from a country, no, I can say there are no cameras. I just can't, last week I was in Azerbaijan, and I found in the one-stop investment center, you can register a company in 15 minutes. So if we can get there, that's a start. Just improve the environment for doing business. The tax regime needs to improve. The whole licensing regime. I've got someone came to see me a couple of months ago. He says, Minister, I invested in Zambia, and not in your country. I said, why? He says, because when I tried to go into the sector, I was told that I need 7 different licenses to begin to do business. Next door, now I've already said the country, I didn't want to say the country. Next door, in that other country, I only needed 1 license. And that's the difference, Minister. You have bureaucrats whose sole job is to issue licenses. They're not issuing them fast enough. Some of them are, are not being straight. And this is real. I'm being open about this. So you need to do something about it. So we're doing everything we can to correct things, to make it easy for you, and really improve the environment for doing business. So by end of this year, in fact, earlier than that, we'll launch a one-stop shop. The bill for that is going through Parliament. Temba will tell you about it, the legislator. I think by March, April, we'll be done with that. This will start functioning properly, and we're determined that this will eventually be graded to a full offshore investment center where there are minimal controls, and Zimbabwe can compete with Mauritius, it can compete with Isle of Man, and it currently competes with Botswana. That's what we're trying to do for you as investors, improve the environment for doing business. We have everything, we have the resources. We also want to lower the risk premium for you so you can maximize your risk-adjusted returns. I thank you.
Thank you very much, Minister Ncube. I would now like to invite Mr. Herbert to the stage, who will give his reaction and response and give a little bit of insight into the private sector and entrepreneurial spirit of Zimbabwe.
Thank you very much indeed, Director of Ceremonies. If I can recognize my Minister, Honorable Minister Professor Mthuli Ncube. Also recognize our Ambassador, Shamanu, Honorable Temba Mliswa, our independent MP, Mr. S. Schwarzbach, and the wonderful Dolda Hotel team. My colleagues that we're traveling with, Ed Manikai, Gift, Smaka, Green, Ross, Patina, and Martin Ganda. Thanks for this phenomenal organization. Ladies and gentlemen, it is with great pleasure to be presented with this opportunity to share with you an on-the-ground business perspective in Zimbabwe from us, domestic investors and operators who are on the coalface, so to speak. The fact that we are here means that we are still in business. There is no doubt that the Zimbabwe business sector is a function of the political, regulatory, and economic environment prevailing in the country. It is also true that the government of the Republic of Zimbabwe and the business sector face a myriad of challenges whose roots date back to 2 decades following a land redistribution exercise which resulted in punitive international consequences. This is in spite of substantial corrective measures that are being implemented, most, if not all, which have been well articulated by our Minister of Finance. That includes the repeal of the indigenization laws and other legislative frameworks to improve the business environment, and public pronouncements reaffirming the security of the rule of law, return to constitutionalism, and guaranteeing property rights. It is important to highlight that the checkered relationships that followed as traditional trading and cooperating countries in the Western world imposed various restrictions and sanctions resulted in a devastation of the Zimbabwean economy, which still characterizes the country today. These are typified by undercapitalization, the need for retooling. A lot of our equipment are 40, 50 years old, low capacity utilization, currently at about 30%, shortages of working capital, foreign currency shortages for consumables, and inability of business to repatriate dividends, to name some of the challenges. On its part, the government has put in place as one of the reform agenda themes significant efforts to re-engage all the concerned countries, especially in Europe, as well as the United States. These efforts have resulted in the thawing of relationships, with some restrictions against some firms and individuals being removed. However, more remains to be done to fully restore bilateral economic cooperation with these countries. Unfortunately, resumption of private investment and capital flows into the country is also still lagging behind due to some residual issues such as United States ZIDERA, as well as implementation of fiscal, monetary, and domestic and international debt. As a business community, we strongly believe that as the government grapples with the various historical challenges amidst disproportionately high public expectations, one sure way towards economic recovery is through private sector investment. Thus far, the private business sector has demonstrated resilience in continuing to provide goods and services against all forms of headwinds. Like I said, the fact that we are here means that we are still standing and fighting, and private sector in Zimbabwe is still very much viable. Thus far, the private business sector has demonstrated resilience against all these headwinds. However, the resilience is slowly wearing thin due to lack of international credit, due to lack of investment, and lack of technological upgrades. Yet the economic viability of most of these businesses are unquestionable on the basis that they operate in an economy with abundant natural resources and a well-educated and skilled labor forces the minister has talked about. Zimbabwean businesses also have a readily accessible, regional, and increasingly integrated market, especially for light manufactured goods. While Zimbabwe's population is 14 million and we have a GDP of 25 billion, it is an entry into SADC. And SADC, which has a population of 300 million and a GDP of 570 billion. Zimbabwe is well positioned to be the gateway into the SADC region. Zimbabwe represents a great investment opportunity across all sectors. Some notable ones which also constitute export revenue in tourism, mining, and export agriculture. The minister is seized with the issue of currency reforms, and we believe as private sector that export is one of those that will reduce the burden on him. The country is seeing a surge in tourist arrivals, while the number of beds in hotels, lodges remain unchanged because there have been no new hotels entering the market. While we are blessed to have one of the 7 wonders of the world, Victoria Falls, and many other wonderful attractions, our people remain as the biggest asset in our tourism and business. It is, the minister has talked about it, that we have the highest literacy rates in Africa, and our Zimbabweans are renowned all over the world for their education and hard work. We're running out of rooms, Mr. S. Schwarzbecker, we're running out of rooms in Victoria Falls. We have 3,000 rooms only. I'm aware that this hotel is almost 200 rooms, so that will be a huge contribution to our product. And we want to welcome you pretty soon, everybody here, to the Victoria Falls Dolda Hotel, and very, very soon, I hope. Horticulture, exports of fresh flowers, vegetables, and fruits to Europe are increasing at a quickened pace, yet investment and the financing of production in the sector falls far too short of it to contribute meaningfully to the country's economy. But there is a huge opportunity there because we've been in this sector for many years. Given the challenges that the Zimbabwe economy has gone through over the past 2 decades, there also exists a sizable selection of distressed assets that are available to both domestic and foreign investors. Some of these assets are housed under what we call ZAMCO, the Zimbabwe Asset Management Company. A list of assets in the ZAMCO portfolio, which exceed 70 companies, and assets exceeding the value of 1 billion are available, and we have the list with us right now. Furthermore, foreign investors interested in portfolio investment can access Zimbabwean assets through a well-regulated Zimbabwe Stock Exchange, and we are representing those companies right here. Equally important, the government, represented here by Professor Ncube, is far ready now than ever before to tailor supportive economic policies to ensure a conducive, enabling, and competitive operating business environment. This can do, and future-looking open for business attitude of the government is informing the many reforms that have been embarked upon and aptly described by the minister. The business community acknowledges that tangible results for most policy reforms are yet to show, given the slow nature of structural changes to bear fruits. That said, a lot more needs to be done so as to fully de-risk the country's operating environment. In this regard, the business sector wants to see an all-encompassing reform approach and the pace of reforms accelerated significantly so that the impact is measured and the period of painful adjustment shortened. You have the minister, and we're optimistic that these reforms will indeed be expedited. Over and above the much-needed capital and equipment required to modernize business operations, most companies need global partners for continuous technology transfer and quick integration in the global supply chain. These gaps constitute immediate investment opportunities in addition to that presented by the privatization program of state-owned enterprises. Itself, a demonstration that the government is exiting the business of doing business to focus on regulation and providing a conducive investment and operating environment, whilst assisting in getting the government to balance its books and help the economy to increase efficiency. The path to the ultimate and ideal economic model is not without challenges, as currently being experienced, but the sheer determination of the country to pull through will eventually yield results. The historic burdens of Zimbabwe's economy also translate in a number of risk factors. For instance, the effects of the hyperinflation period of 2007 to 2008 has dragged on through a currency risk whose resolution in a fragile economic setting has proved complex than we ever imagined. While the government is reforming both the fiscal and monetary aspects of the economy to pave the way to a much-needed and urgent solution to the currency challenges, investment in export business will be a key ingredient to a sustainable solution. Wherever we've been to over the past few days and back home, everybody has talked to us about the need for currency reforms. But we're glad that the minister has articulated that. He says he's got the dates, and I'm sure we'll get to know about this pretty soon. But it is important and urgent. This is true for many other risk factors, some of which are being mitigated by the ongoing reforms. It is gratifying to note that the government has committed to reforming the financial markets to international standards, to permit the trade and hence price discovery of financial instruments, including currencies, providing a framework of consistent and predictable economic policies, and similar other measures that will position Zimbabwe as a preferred investment destination. However, this journey is best traveled along with investors and financiers such as those in this audience, so that its global experience can shape the country's destination. In conclusion, I would like to state that significant investment opportunities exist in Zimbabwe, particularly in the key sectors such as infrastructure development, agriculture, mining, tourism, manufacturing, and services. Present here today and at every table are representatives of some sectors who are very keen to engage with you on the opportunities in their sectors and also be happy to link you with other businesses in the country. You will agree with me that it makes strategic sense to work with locals in any foreign investment destination. As the country's private sector, which is now being consulted regularly by the Honorable Minister of Finance and the Head of State for input on key reform matters, we are in total support of the government and keen to partner with you as our global partners. We are convinced that the future is bright and will reward investment in the country's rich mining, agriculture, tourism, and many other sectors that have immense room to grow. You are all invited to enter Zimbabwe's economic space without any delay. And the best way to assess actual investment opportunities and also quantify and measure risks in the economy is by visiting the country and obtaining first-hand information. We have learned that many people who visit our country as tourists end up investment when they see the intellectual capital of our people as well as the infrastructure that we have. I can assure you, if you do come to Zimbabwe, which we hope you do soon, you will be pleasantly surprised. Thank you for your attention and hope to see you in Zimbabwe very, very soon. Tinotenda, siyabonga, danke schön.